Imagine this. You wake up one day, check your bank account, and realize you've built an extra 1,000 just from investing. But here's the kicker. What if you could start that journey with just $100? Sounds impossible. Well, buckle up, because in the next 10 minutes I'm going to show you how to turn that small amount into your first step toward financial freedom. Let's face it, most of us are told that you need thousands of dollars to start investing, but that's simply not true anymore. The real question is, what are you doing with the money you already have? Whether you've got $100 saved up or a bit more, today, that amount can work hard for you. But first, let's deal with a little fear. Yes, fear. Fear of losing your money, fear of making mistakes, and worst of all, the fear of being left behind, while others make their money work for them. You might be wondering, what if I lose my $100? What if I make the wrong decision? Well, the real risk is not starting at all. Imagine 5 years from now, looking back and realizing you missed the boat simply because you didn't take action when you had the chance. Let me say this, every day you wait, you're missing the chance to build wealth. But here's the good news. Starting with $100 is not just possible, it's the perfect way to get your feet wet. So, let's dive in. Alright, you're ready to jump in. But first, you need to understand that investing isn't about gambling or chasing fast money. It's about making smart, calculated decisions that can pay off big in the long run. Step 1. Choose the right investment platform. Before you even think about where to put your $100, you need to choose the right investment platform. Do you know the difference between Robinhood, E-Trade, or Fidelity? Don't worry if you don't. This is where I'll help you. Look for platforms that have no account minimums, low fees, and that allow fractional shares. What's fractional shares? Glad you asked. It means you can buy a tiny piece of an expensive stock, like Tesla, for just a few bucks. You don't need to buy a whole $500 share, just a sliver of it. That $100 you have, it's going a lot further than you think. Step 2. Dollar cost averaging. Next up, the concept of dollar cost averaging. This might sound complicated, but it's really simple. Here's the idea. You invest a fixed amount of money, like your $100, at regular intervals, no matter what the market is doing. Why? Because over time this strategy minimizes the impact of market volatility. When the market is up, you buy fewer shares. When the market is down, you buy more shares. Over time, this evens out your cost per share and reduces the risk of buying high and selling low. If you're just starting, this is one of the most low-risk ways to invest your first $100 and avoid emotional decision-making. Step 3. Low-cost ETFs or index funds. Okay, now let's talk about where you should actually put that money. Individual stocks can be exciting, but they're also risky, especially when you're just starting out. Instead, look at ETFs or index funds. These are baskets of stocks that track the overall market or specific sectors. Think of it like this. Instead of betting on one horse, you're betting on the whole race. These funds are diversified, so they help reduce the risk. With $100, you can get a slice of huge companies like Apple, Microsoft, and Amazon without having to choose one stock or risk losing everything on a single bet. Step 4. Reinvest your dividends. Now, here's where things get exciting. Reinvesting your dividends. Many ETFs and index funds pay out dividends, which are essentially a portion of the company's profits. Instead of taking the cash out, you can reinvest it back into more shares, which means your money keeps working harder for you. Imagine this. Over the course of 5 to 10 years, those small dividends could add up. When compounded with the growth of your investments, it's like planting a tree and watching it grow taller and stronger. Don't take the easy path of cashing out. Let your money work for you. So, there you have it. You've got your platform, your strategy, and your investment. Now it's time to take action. But let me ask you, what's stopping you from starting today? Is it fear? Is it uncertainty? Because here's the hard truth. If you don't start investing today, your future self is going to wish you had. $100 today could be the first step to financial freedom tomorrow. And here's the kicker. What if I told you that your $100 investment could grow into thousands over the next few years if you stick with it? The stock market isn't a get-rich-quick scheme, but with patience, strategy, and consistency, you'll see the kind of wealth-building results that only compound over time. The question is, are you ready to start? Because the clock is ticking. Every day you wait is another day you're not building the wealth you deserve. So, take that first step today, and let's make sure your future is a dollar shift worth celebrating.